Hello, in this video, we're focusing on the practical concepts that you can actually apply in the real business world. Hope you enjoy it. Let's get on with it. Today, we're going to explore what it could mean if SpaceX, Elon Musk's groundbreaking aerospace and telecommunications company, decides to go public through an initial public offering, or IPO. SpaceX is unique because it operates at the intersection of space exploration and satellite internet services, which makes its business model unlike any other. This potential move to the stock market would open up new opportunities for investors and could significantly impact how the company grows and innovates in the future. We'll look at the broader implications for the industry and what investors and the public might expect from this exciting development. SpaceX has long been known as a high-impact private company focused on engineering, integrating its operations vertically, and relying on a mix of private investments along with government contracts. However, around late 2025 and early 2026, there were strong signals that SpaceX might pursue an initial public offering, or IPO, by mid to late 2026, possibly slipping into 2027, depending on market conditions. Elon Musk himself acknowledged reports about the IPO plans, which most saw as confirmation that this move is genuine, not just speculation. Bloomberg coverage suggested SpaceX could aim to raise over $30 billion through the listing, with various large valuations discussed publicly. But beyond the headline numbers, what really matters is understanding why SpaceX would choose this moment to go public. The company has grown beyond just providing launch services and aiming for Mars. It now operates two main businesses, launch and spacecraft services, and a rapidly expanding satellite broadband platform called Starlink, which is becoming more like a telecom company with recurring revenue. Because of this dual focus, the IPO wouldn't be a typical aerospace offering. It would likely be positioned as a mix of infrastructure, defense, telecommunications, and cutting-edge tech, with future potential tied to projects like Starship, lunar contracts, and new space applications. This complexity means any serious look at the IPO needs to start with a clear understanding of SpaceX's business model. SpaceX's business model is built around two main engines of revenue. First, there are the launch services using Falcon 9, Falcon Heavy, and increasingly Starship, which serve both commercial customers and government contracts, including NASA. SpaceX's advantage has been its focus on reusability and a high launch cadence, which lowers costs and improves reliability over time. NASA remains a major customer, and starting in 2025, Starship was added to their contract portfolio under the National Launch Services 2 program, securing launch services well into the next decade. However, a large part of Falcon missions now deliver SpaceX's own Starlink satellites, so those launches don't always represent third-party external revenue. On the other side, Starlink is a rapidly growing driver, offering broadband connectivity to consumers, enterprises, and government users. Its revenue comes from subscriptions and hardware sales, and it is expanding into mobility markets like aviation and maritime, as well as defense sectors. Because SpaceX controls the entire pipeline, from building satellites to launching and operating them, it can scale capacity faster and more efficiently than competitors who rely on external launch providers. This integration creates a strong competitive advantage that supports both its launch and connectivity businesses. SpaceX generates revenue not only from launch services, but also through its human spaceflight and exploration programs. This includes NASA contracts for commercial crew missions and cargo deliveries to the International Space Station, as well as private astronaut missions that offer new opportunities in space tourism and research. Additionally, SpaceX is involved in lunar development projects, particularly in collaboration with NASA's Artemis program, where it holds a significant role supporting plans for returning humans to the moon. A key part of SpaceX's strategy is vertical integration, meaning they handle design, manufacturing, testing, launching, and operations internally. This approach helps reduce reliance on external suppliers and speeds up innovation cycles, though it also concentrates risks within the company. Together, these elements reflect how SpaceX combines government partnerships, commercial opportunities, and technical control to drive growth in human spaceflight and exploration. SpaceX's strengths come from several key areas. First, its scale and launch cadence are unmatched in the industry, with a record number of orbital launches completed in 2024, making it the dominant launch provider in the US market. Competitors find it difficult to match SpaceX both on price and frequency. Second, Starlink offers a recurring revenue stream, which stands apart from the more cyclical nature of launch services. Estimates suggest Starlink is driving a significant portion of SpaceX's growth, with revenues expected to be in the high single-digit billions for 2024 and continuing to grow strongly next year. Third, SpaceX's credibility with government customers, especially NASA, is deep and growing, as seen through contracts like the National Launch System 2 that now includes Starship, indicating broad institutional trust across various mission types. Finally, SpaceX's engineering culture emphasizes rapid testing and iteration, which helps accelerate innovation and reduce costs, particularly through advances in reusability, even though this approach occasionally results in high-profile test incidents. Together, these strengths create a strong foundation for SpaceX's continued leadership in aerospace. One key weakness lies in the fact that while SpaceX maintains a high launch cadence, any execution hiccup or reliability issue can have a significant ripple effect. Delays or groundings impact the backlog, customer timelines, and the deployment schedule for Starlink, which in turn affects revenue projections and launch counts. Another challenge is the complex regulatory and geopolitical environment Starlink operates within. Navigating spectrum licenses, telecom rules, and international policies across many countries takes time and can slow expansion, especially given sensitivities around defense-related use. Additionally, the business is capital-intensive with long timelines before seeing returns. Even as Starlink starts generating cash flow, SpaceX continues large investments in future tech like Starship, which means investors may face uncertainty with these long-term, high-variance projects. Lastly, the mixed nature of SpaceX's businesses, combining launch services, telecom subscriptions, defense contracts, and pioneering R&D, can result in what's called a conglomerate discount in public markets. Investors may find it difficult to value such diverse operations consistently, leading to potential volatility in valuation, especially shortly after going public. SpaceX gains a cost advantage by reusing rockets and learning from each launch to reduce expenses and improve profit margins faster than competitors, many of whom are still developing reusable technology. Their vertical integration is a key strength. They control manufacturing, launching, operating the network, and selling services directly, which creates a cycle where increased launches expand Starlink's capacity and revenue, funding further growth and innovation. Another edge is having Starlink as a built-in major customer, ensuring steady demand for launches and better utilization of their rockets, unlike companies that depend solely on outside clients. Finally, SpaceX benefits from a strong government relationship, particularly with NASA, which builds trust and credibility that's tough for new players to replicate, providing a protective barrier in important national space programs. SpaceX's revenue has grown significantly from 2023 to 2024, with estimates placing total revenue in the low teens billions, highlighting strong growth driven primarily by Starlink and launch services. Industry sources estimate 2024 revenue around $13.1 billion, with about $8.2 billion from Starlink subscriptions and roughly $4.2 billion from launch services. Starlink's rapid subscriber expansion is shifting the company's revenue mix from project-based launches toward recurring income, which some analysts believe could usher SpaceX into a new phase of improving profitability. Looking ahead, an IPO would bring major changes financially, such as diversifying funding sources, creating publicly tradable shares that can be used for acquisitions and employee incentives, and imposing more rigorous reporting standards. While public markets could lower SpaceX's cost of capital if they respond favorably to Starlink's growth, investors may also demand clearer separation of revenue segments and scrutinize periods of heavy capital spending or delays, especially related to Starship development. SpaceX's approach to customer experience varies significantly depending on the type of customer. For government and institutional clients like NASA, the focus is on stringent oversight and structured certification processes to ensure safety and mission assurance. This means SpaceX provides detailed documentation, safety cases, and transparent insight into their readiness, which is crucial for sensitive human spaceflight missions. For commercial launch customers such as satellite operators, the main concerns are price, schedule reliability, and mission success. While SpaceX offers competitive pricing and a high launch cadence, there is growing competition as customers want alternatives to avoid potential bottlenecks if capacity is constrained. Lastly, for Starlink users, customer experience centers on hardware availability, ease of installation, network performance, including latency and stability, responsive customer support, and expanding coverage. The company's subscriber growth in 2024 has been helped by pricing strategies, increased service capacity, and new products. But going public could raise expectations for transparency and support and churn metrics, as investors may view Starlink more like a telecom company than just part of aerospace operations. A SpaceX IPO would be a significant event because it offers the public a rare chance to invest directly in a company that leads in two major areas: launch services and the rapidly growing Starlink broadband network. Elon Musk's recent public comments and ongoing media coverage suggest that the possibility of going public is increasingly real and not just speculation. The core investment appeal would largely depend on Starlink's growth, its recurring revenue, global expansion, and potential for strong margins, while SpaceX's launch business adds valuable credibility and strategic infrastructure. At the same time, there are real risks to consider, such as potential execution hurdles, regulatory challenges, and the tension between long-term ambitions and the short-term scrutiny that comes with being a public company. If SpaceX can clearly present its story as telecom-like cash flows, supporting cutting-edge space capabilities, an IPO wouldn't represent an exit, but a way to accelerate its next phase in commercial space and global connectivity. If you found this video useful, there's plenty of more business and finance videos on the channel that you'll enjoy watching and get great practical value from. In the meantime, thanks for watching.